Wingstop has cooked up a clever way to keep sales sizzling and triumph over intense chicken wing inflation to launch a new brand. The wing chain has launched Thighstop, a digital-only brand that, you guessed it, folks, just sells juicy, saucy thighs. Joining us for more on this is Wingstop CEO Charlie Morrison. Charlie, we last talked in November. You came on here and we joked a little bit about possibly you creating a brand called Thighstop. You were testing thighs at the time. We both laughed. I moved on to the next question. But now here you are with a brand online called Thighstop. Why did you launch it?
Well, at the time, I couldn't let the cat out of the bag, but we've been testing thighs as a center of the plate item for quite some time. And quite frankly, we think thighs are the most underappreciated part of the chicken. They're left at the bottom of the bucket, and that's just not fair. So we have been perfecting this idea for a little bit of time now. You've seen virtual brands pop up during the pandemic. They've made a big splash. And this is our way of launching a great new product in a unique way. And it's going great so far.
You're right, it's not fair. And to your point, I've never tried boneless thighs, so I will have to give these a try at some point this week. So my question is, what is more profitable for a Wingstop? Is it selling thighs or your traditional wings?
Well, I think it's a combination of all of the above, Brian. We've pioneered wings as a center of the plate item for 27 years in our history. We added boneless wings. We also sell tenders. What we're looking for is the opportunity to sell all the parts of the chicken and give each one of them their rightful place in the center of the plate, sauced and tossed with our 11 bold and distinctive flavors. We think this is going to be a fan favorite. And quite frankly, this is a big opportunity for us to expand our supply chain leverage by making sure that we're buying all the parts of the chicken, which we think will be an even more profitable venture for our franchisees in the long term.
Well, I'm curious then, what has taken so long for the thigh to get its due? We've been chatting about this all morning and chatting about it in the context of when we go to the grocery store, thighs are not only less expensive, they also are harder to screw up, and they in general taste a lot better than if you go and get chicken breast. Now, I know maybe there's higher fat content, they're not quite as healthy, but just as a general idea within the chicken industry, it seems that thighs are now taking a more prominent role, not just at your brand, but at others. What's taken so long for us to get here?
Well, I think it's a couple of factors. Number one, we've exported thighs for so many years, just like we did chicken wings, and that's how we founded a whole chain around that. This product and the leg quarter itself is very similar in that there's not a lot of demand for it. We've trained consumers for so long that the breast meat is really the part of the chicken wing or chicken we should focus on. Wings second, and then the leg quarter is kind of left out there for unique opportunities. We believe it deserves that rightful center of the plate presence. And it has taken a while. I think the other piece is the commodity markets right now. There's so much demand for chicken. There's a shortage in labor, which is causing supply challenges for a lot of players. And this product now has found its rightful place. It's affordable. It is a better product. It's juicy, tender, easy to cook and execute. We think it's going to be a big hit.
Charlie, I've been on the thigh train for years. I don't know where everybody else has been, but you touched on labor, and in particular, the labor difficulties that the chicken processors have been having. Does the thigh supply, though, presumably that's also affected by the shortages, right? How does this change the equation at all in terms of you guys getting that supply?
Well, yes and no. The thigh product is in good supply. Wings are in great supply. We're getting all the wings we need right now to fuel our business. We've seen others shorted in the market with product, but being one of the biggest, if not the biggest player in the space and an everyday player, our wing supply is in good shape. The opportunity here for us is to unlock the whole bird, meaning we can now start to grow out whole birds and chickens so that we can contract more of our supply rather than buying it on the spot market. And so there's a lot of demand for breast meat, certainly a lot of demand for chicken wings. The leg quarter, not so much. This is our opportunity to really optimize our supply chain, buy the whole bird, and set us up for future success.
Charlie, this really now puts you going head-to-head with KFC in terms of the whole bird. Are you nervous about going up against the Colonel?
Not at all. Not at all. Our brand is so unique. We don't just fry up a bucket of chicken. We actually sauce and toss all our chicken with our 11 bold and distinct flavors. We think that is really the differentiator for this brand. We've centered it on chicken wings. We believe we have this opportunity now to expand the product line, leverage more of the chicken, but we're still going to give each product its own feature. We won't sell it in a bucket like some of the rest do.
All right, fair enough. Before we let you go, we are seeing some reports just overall in the fast food industry that the industry has now started to pull back on promotions because of the inflation they are seeing. Have you had to pull back?
No, I think this is a great example. We launched this product yesterday. We're going to continue to push and grow the business. We've seen inflation, certainly. We've seen some challenges with labor, but our model is so unique. It doesn't take many people to staff and execute a Wingstop, even at high volume. Our dining rooms are still, for the most part, closed across the country, but we're able to sustain good growth without it. And so our promotional engine is up and running and moving at full speed right now.
And just to confirm, you're still Wingstop CEO. You're not Thighstop CEO, right? Just want to clear any confusion.
Well, some have said both. I'm the CEO of both companies. At some point down the road, we'll have to figure out how to pull these two things together.
All right, fair enough. We'll leave it there. Wingstop CEO Charlie Morrison, good luck on the new venture. We'll talk to you soon.
Thanks, Brian.
All right, welcome back to Yahoo Finance Live on this Tuesday morning. We've talked a lot about the auto space this year. We've seen a lot of electric vehicle adjacent companies come public via SPAC. But when you look at the performance of the stocks in the space, it has been about the old school names. Ford and GM have really been outperformers, trouncing the S&P so far this year as both companies come out and continue to increase their spending into their electrified future and really just come out with a series of announcements that the market just seems to love. So let's talk a bit about what's happening in the space at large. Colin Langan joins us once again. He's an automotive and mobility analyst over at Wells Fargo. So Colin, let's start with Ford and GM. Both companies coming out over the last couple of weeks talking about new electrified products, new investments they're going to make into the space, and investors bidding up the stock on more spending. What do you make of the dynamic that the market is reacting to out of these two, again, old line automotive powers?
Yeah, I mean, I think the big question is, ever since Tesla came along, is whether the traditional automakers can make the pivot, whether they're taking new competition and emerging entrants seriously. And these commitments and these announcements are simply a sign that they are. And so I think there's a lot of good news that particularly Ford, I think this year has sort of started to convince investors that they are really committed into future mobility and made some very positive announcements. And GM has just really continued to make the announcements that they've been making for several years now.
Colin, you have overweight ratings on Ford and GM. Which stock is the best bet right now on an electric car future?
I mean, I think both are very well positioned. I mean, I think GM has been talking about this longer, and so the Ultium battery strategy seems to be longer in the pipeline. That said, I really think the Mach-E is one of the most compelling EVs from a mass market automaker, and Ford outlined also a very compelling, though more recent EV strategy. So I think it's kind of interesting. I think the this actually has positioned the U.S. automakers better than I think global automakers in general, because they know the threat of disruption, because they've been disrupted in their home market, losing market share for decades. And now they're taking these threats seriously and responding.
Switching gears a little bit, Colin, Tesla stock, it continues to be under pressure. Do you think their involvement in Bitcoin is putting pressure on the stock?
I mean, it's creating, it's 1 billion of their 17 billion in cash. So it is actually quite a bit of a distraction given the size and market cap of the company. So, I mean, it really shouldn't be taking too much impact, but there's a lot of news in the company. I imagine it is creating some volatility though, for sure.
Hey, Colin, we talk all about the new technology from the automakers, whether it be LiDAR. We talk to a lot of LiDAR makers for autonomous driving. We talk about electric vehicles. You're out with a note that says maybe what we're not paying enough attention to is the big data proposition at the automakers, that they're interacting with you more through the screens in the vehicles. What are they getting from you, and how should they be and will they be using it in the next few years?
Yeah, I mean, there's a massive amount of data coming out of the car, and actually, my concern for the traditional automakers that they've spent, they were spending too much time maybe chasing electric powertrains and not enough at developing the technology. I really think Tesla is a technology company. That's why people are buying the cars, and it happens to have an electric powertrain inside it. I really think Ford's Investor Day really showed that they understand the importance of leveraging data in the car. So it's about the diagnostic data. So you'll be able to hopefully identify maintenance issues early and be proactive about addressing those issues, and actually using the infotainment in the vehicle and your connectivity through your phones to maybe seamlessly get an appointment with the dealer to make that whole servicing process very, very painless. It's also about understanding your customers, because you know an awful lot about a person. You'll know where they live, where they work, where they shop. You'll know what kind of music they like. So you'll really be able to profile them. And the driver monitoring in the car actually might even give us a sense of how you're feeling that day, because you'll be able to read your facial expressions. So there's a tremendous amount of data that the car will have from that perspective that will allow them to understand their customers and realize this is an industry with very, very low customer loyalty, about 40% loyalty to which average brand is typical. That means more than half your customers go somewhere else after 5 years. So improving that is massive in terms of reducing your marketing spend. And then lastly, having that connectivity opens you up to whole new servicing opportunities. You could, pay for over-the-air updates. You could do subscription services like OnStar. You could do fleet management, which is a big part of what Ford was announcing at their last Investor Day. All much higher margin than the traditional auto business. So it's a very exciting time as these companies pivot toward this type of technology.
Yeah, Colin, I just got a new car, and it has an app, and it's gonna, I guess, tell me when I need an oil change and all that. It tells me how much my oil's already come down. I gotta say, I mostly feel like they're just gonna tell me I gotta come in right now because they want the $80 or whatever it's gonna cost me, but maybe we can bridge that gap at a future point. But this whole data conversation also makes me think of self-driving cars and what the future of autonomous driving looks like. How are you thinking about that? Because it seems like some of that hype has come out of the market, and these other data opportunities that you're talking about are now a more realistic and more practical maybe path forward over the next 5 or 10 years.
Well, I think definitely level 2 autonomy. So that's sort of semi-autonomous functionality is rolling out. Ford will be rolling out Blue Cruise. GM is rolling out its Super Cruise across more vehicles. So that sort of semi-autonomous driving will be important. In terms of full self-driving, in terms of being able to take a nap on your way to work, that is probably going to be, I think most experts would put that as 10 years away, if not longer. I think people are realizing to get all those edge cases is taking a significantly longer amount of time. We do think, and we did a report a couple of weeks ago on autonomous delivery, I think those more business to business specific use cases have a better sort of near term sort of lifeline, and maybe we'll see them a bit earlier in higher scale. The scale is always relative in the next 5 to 10 years. But I do think, people are starting to realize that it's just going to take a long time before we really see scale applications of autonomous rideshare.
All right, Colin Langan, mobility analyst over at Wells Fargo. Colin, really appreciate the time as always. I know we'll be in touch. Thanks so much for joining this morning.
Thanks.
Welcome back to Yahoo Finance Live. In today's Crypto Corner, focusing in on a bit of a sell-off we have in the crypto space as Bitcoin briefly dipped below that $30,000 level. And despite the big sell-off, companies working on the sector's infrastructure continue to raise heaps of money, and Hong Kong's crypto trading startup Amber Group is the latest proof of that. The company became the latest crypto-focused unicorn, raising $100 million in a Series B funding round with backing from big names, including Tiger Global Management and China Renaissance. But that pre-money $1 billion valuation is up 10x from its Series A just 2 years ago. And for more on that growth, very happy to bring on the CEO and co-founder of Amber Group, Michael Wu, joining us in the wee hours of the night from Hong Kong. Appreciate you staying up for us, Mike. And want to get into kind of how you guys have been able to grow the business in just a second. But since we're seeing a pretty intense sell-off here today, maybe just focusing in on the volatility. I mean, have you seen any signs of maybe institutional investors pulling back in the enthusiasm you saw earlier in the year, given the sell-off now?
That's a great question, Zach. I actually, to be very straightforward, I don't think institutional investors are backing off at all. If anything, I think this probably provides them a better timing to really, assess this market in terms of its fundamentals, in terms of its infrastructure, and give them a bit of time to see things more clearly, after all the frenzy takes a pause, right? If you compare it to, say the fourth quarter of last year or the first quarter of this year, market was just rallying too much and too fast. If you are a long-term institutional investor, you probably do not want to jump all in that kind of market, and rather wait for a dip or for a consolidation where you will have the time to really analyze this very young and a new asset class and then really evaluate for the long run. And from the kind of flows we see, I think institutional investors are still adopting to this asset class, step by step, and we think that's very healthy long term for the industry.
Yeah, I mean, even though we're seeing crypto crash trend on Twitter, it's worth pointing out Ether's still up 155% year to date. So just kind of putting the losses maybe in perspective at this point. But when it comes to you guys at Amber Group, interesting, because I assume volatility would be good regardless for you guys if you're playing it kind of from a technical place of trading in what you guys do for your clients, but also interestingly launching the app maybe focused more on the retail consumer side last year in Q3 of 2020. So talk to me about the growth you guys are seeing in terms of what the strategy is to drive things now off that additional $100 million in fundraising.
Sure, thank you. I mean, for us, right, our backgrounds is more, we started as a bunch of traders and quants out of Morgan Stanley, right? So our background was a bit more on the institutional side to start with. And that was our initial client base, for the hedge funds, VCs, corporates, or family offices alike, right? But last year, since the launch of our mobile app, the Amber app, and what we call the product suite, which also included the web portal and our 24/7 voice desk, we really think, we have the technology, we have the ability, we have the platform to really bring the same kind of institutional grade crypto finance services to global individual customers. We think this kind of a one-stop integrated smart crypto finance services can be no longer exclusive, right? They can be enjoyed, and everyday investor, everyday trader can benefit from the same kind of services. And that's what we've been focusing on, since I guess launching of the product last year. And this fundraise, as you mentioned, of course, it's a big milestone for us, but I really think it's more of a product rather than, it's more of a side product even, of what we focus on, rather than, really a huge deal for us. I mean, it will help us, with the recognition and backing of all these, more well-known traditional investors. It helps, bring the name more mainstream. It helps with broader crypto adoption, not just with Amber. And, I think, we're doing our bit for the industry in that sense as well.
Michael, yesterday we saw the PBOC come out with a statement to crack down, or really guiding the big banks as well as payment services along in cracking down on any existing loopholes for those who are currently trading crypto. And I know the crackdown right now is on the mainland, but I'm wondering how you're watching that play out and whether you are concerned that there could be a spillover effect into Hong Kong.
Thank you for the question, Akiko. I think, like you say, there are some, crypto is a global asset, right? Crypto finance is a very global industry from day one. And therefore, as crypto finance entrepreneurs, we kind of have to learn and to deal with different regulations in different jurisdictions. Some of those, including mainland China, will be a bit more conservative and somewhat against crypto. Well, there are also other jurisdictions that take a much more open and welcoming stance towards the industry. Back to your question, I think we're not overly concerned. This is still a very global market, and we think this industry is still very young. There will be ups and downs, and sometimes, like what we've seen recently, the fluctuations can come from external policy shocks. But over time, I think, it's still superior technology, and superior technology will prevail eventually. And in terms of Hong Kong or broader Asian markets, I think, regulators will take different stance, and, even in the same region or same country, regulators will take a different stance over time. And, our approach is always, we are observant, we are open-minded, but, we try to innovate within the framework that's given by different regulators in different markets.
Yeah, and it sounds like, your institutional customers, they're large hedge funds, family offices, businesses as well, are the bulk of the business right now. I wonder how much that might be coming from China versus maybe, when we look at opportunities elsewhere, which ones you're keying in on, as it seems like there's quite a bit of money chasing that side of the crypto sphere in capturing some of that institutional excitement.
Yeah, for sure. I think for institutional investors, the one thing is they are also very global, right? If you're large enough, whether as a fund, as an asset manager, or as a corporate, likely you have, operations, or you have, businesses across multiple countries, and there will be, parts of the world where your business can interact with crypto. And overall, I think the global business community, right, or the global investing community overall is still very welcoming, and there's still a lot of them are still curious, but more so, are really accepting the crypto adoption.
Today might be a little bit harder to accept it, but of course, as we noted over the year, still enjoying some gains there. But Michael Wu, Amber Group co-founder and CEO, congrats again on the Series B, and keep us posted on the growth out there. We'll chat again soon. In today's Startup Spotlight, it was a tough go for a lot of gyms in the pandemic, but one backed by the likes of Tony Robbins and Pitbull and Tim Draper, Grit Boxing, after they shut down their New York location during the pandemic. They learned quite a bit about the way Americans were working at home and leaning in with a big bet on working out at home, as Grit Boxing looks to launch its new at-home workout product, the GRIT EPIQ, to come after a lot of the companies that enjoyed some big boosts like Peloton in the workout at home trend. And for more on that, I want to bring on the co-founder of GRIT Boxing, Dylan Zanker, joins us now. And Dylan, I should note you guys are back open in New York, humming along there post-pandemic, but also this big bet around GRIT EPIQ, and you guys are fundraising right now in Republic as well. Talk to me about what you see there as demand continues, even as gyms like yours open up.
So I'd love to tell you a little bit about the GRIT EPIQ, which we just launched. It's a total gym in your home. It's a beautiful piece of furniture. It opens up like a Tesla. You can see it there on the video. It opens up like a Tesla. And there's a two-way interactive mirror. There's haptic knuckles, which we've really created a gamified boxing experience. We have AI in there. It's really top of the line artificial intelligence that gives you feedback on your form, and it counts your reps. And we also have smart digital weights there, so you'll never have to go and buy another weight set ever again. We're calling it the most intelligent home gym because there really is nothing like this out there, and that's why I'm really excited to announce it today.
Dylan, why launch a home gym now? I mean, it feels like everybody is wanting to go back into the gym away from the home experience. What are you seeing right now that tells you there's a lot of upside, even with things opening up?
Look, so we've created a totally differentiated product. So the GRIT EPIQ is not just a piece of workout equipment or total full gym. It's also a full-on social experience. And this is what really gets me excited. Have either of you actually been on a Peloton bike before?
I actually haven't.
You have not?
I have.
Well,
I have.
You have, okay. The problem with the Peloton bike is it lacks social interaction. So sure, you can give someone a high five, a stranger a high five on the Peloton bike, but it's really not that social. So, you can give a high five, but you can't look people up. You can't DM them or anything. And I get it. The Peloton was built 7 years ago. We've built the GRIT EPIQ during the pandemic, and we've built it for the post-COVID world. So it's all about a full-on social experience. So we've launched something and we've created something. It's called the GRIT EPIQ Social Plus. It's all about a full-on social experience. So unlike some other connected fitness products and unlike the Peloton, you'll be able to go on the GRIT EPIQ and really get to know people. You'll be able to look them up. We'll have bios of people. We're going to have virtual meetups. We're going to have networking, dating. We're even going to have a GRIT virtual bar where you're going to be able to hang out and meet people before and after class.
Yeah, I'm a shy guy. Gym's making me nervous as is. I kind of like the idea of working out at home for being a recluse and not having to worry about anything like that. But it is interesting because you are putting your money where your mouth is when it comes to taking on Peloton, because there are some people out there who might challenge you when it comes to the social aspects, who love their Peloton, but you're offering the ability for people who maybe don't to trade theirs in, their Peloton bike in, for the GRIT EPIQ. Talk to me about maybe how many people you expect to do so and how many you're prepared to honor.
So I've got a special announcement today, and it's today on your show. It's exclusively on your show because I really love Yahoo Finance, love what you guys are doing. It's called the Peloton Trade-In Program, okay? We're announcing it today on your show. If you have a Peloton, anyone out there who has a Peloton bike, when we launch the GRIT EPIQ, we'll come to your home. We'll take your old Peloton bike, and no matter what condition it's in, if you've used it a lot or maybe just a little or it's brand new, we'll take your old Peloton bike and give you a brand new GRIT EPIQ absolutely free. So it's a pretty big deal. We'll take your old Peloton bike, give you a brand new GRIT EPIQ absolutely free. And I'm doing this because I'm hearing from a lot of people that they're tired of the lack of social connectivity on their Peloton bike and some of these other connected fitness products. So I really want other people to have the opportunity to experience the GRIT EPIQ. And I know once they try the GRIT EPIQ and all these amazing social features, I don't think they're going to be going back on a Peloton bike.
I gotta say, I love it. I love the enthusiasm. I love, coming after your competitor there, straight in the face, punching him in the face, the grip boxing maneuver, perhaps. But Dylan Zanker, appreciate you hopping on to walk us through all the progress there with the GRIT EPIQ. Appreciate it, man. Be well, and thanks again for coming back on.
Can I just make? Zach, can I just talk about, we just launched on Republic. It's a crowdfunding campaign where anyone is allowed to invest in us. Thank you for having us on our show. It's called republic.co/grit. We want all the individual investors to have an opportunity to invest alongside as we thank you.
I forgot to mention the Republic shout out as well to join perhaps Pitbull and Tony Robbins and their enthusiasm around the product as well on Republic, one of those other platforms we spotlighted before. But Dylan Zanker, appreciate
Welcome to A Time for Change. I'm Sibile Marcellus here with Kristin Myers and Alexis Christoforous. What does Richard Branson, Keira Knightley, Barbara Corcoran, and California Governor Gavin Newsom have in common? They're all dyslexic, which means their brains process language differently than most. It's a learning disability. Today, we're going to focus on those types of invisible differences and how best to navigate them in the workplace.
But first, a quick lesson in the term that is at the center of today's conversation, neurodiversity. So we're all different, right? We know that no two brains, no two perspectives or personalities can be identical. Well, that's basically neurodiversity, the wide range in which we all think and act. You're a linear thinker. I'm more out of the box. You take information in best by reading. I prefer listening. Well, today, more and more companies are making room for those differences, including pushing to hire and support neurodivergent people, those with autism, ADHD, dyslexia, or other differing characteristics that don't fall neatly into one category. These conditions, once thought to be inhibiting or distracting, are now being valued by companies looking to foster unique thinking or harness invisible superpowers. Neurodivergent people make up an estimated 20% of the population, and many say they succeeded not despite their differences, but because of them.
And business mogul and Shark Tank host Kevin O'Leary is one of those people. He is dyslexic and calls dyslexia his superpower. But that doesn't mean it's been an easy road for him. Even to this day, he gets very emotional about what it was like to face his learning disability and to overcome it. Here's our conversation.
Well, dyslexia gets misdiagnosed all the time, but the way it manifests itself with a young child is when they start to fall behind in reading and math testing. that's the first time it usually shows up in a concerning way, because it's not a small delta, it's a large one. I think I was about 7 years old when it became a real concern to my mother, who was wondering why I was falling behind in school. And her teachers were saying, look, he's just not focused, he's not concentrating. But that wasn't really the only issue. Dyslexia was starting to manifest itself. And for most families, even today, that's where it starts. It's the teacher seeing them. They can excel in other aspects of school, but in reading and math scores, there is definitely a big delta that starts.
So, all right, you're about 7 years old. How did you go to a doctor, or how did you know that you had this condition?
Well, obviously the angst my parents felt was palatable. They were really concerned, and they were wondering what was the learning disability. And I went through a battery of tests. I mean, just everything. But that's what parents do. They try and solve, and they go to different specialists, et cetera. What could it be? I was extremely fortunate at that time, maybe serendipitous luck, but I was living in Montreal, Canada, and there was an experimental program at the University of McGill with Marjorie Golick and Sam Rabinovich, who have become legends in the work around dyslexia. Their research is everywhere. But I was in that first cohort of students. It was really tough, because what they tried to teach is, they said, look, we know what this is. This is dyslexia. That's what it is. And it manifests itself in each of these students. I think at the time there was 12 of us in the program. And it's different for all of them. For example, one of the things that happened to me, I'd be walking down the street, and all of a sudden the universe would shift 90 degrees. And I was lost. I didn't know where I was.
Oh, it was many years ago, Kevin, but you still get real emotional about it. Henry Winkler, the actor, has talked about how it caused a lot of friction in his house. There were lots of fights because his parents thought he was being lazy, and they just didn't understand why he couldn't focus.
Yeah, that is a problem. But the solution to this is to have, dyslexia is not like other learning disabilities. It's completely its own issue. And the reason that is there are very, very high functioning people that are very dyslexic. The founder of JetBlue is dyslexic. Many others have dealt with it. And the whole point is that at the end of the day, it's the way it was taught to me, the way I got over it was, Sam Rabinovich used to say to me, the professor, that he'd sit me down and say, look, you're the only person in your class that can read a book upside down in the mirror. You have superpowers. No one else can do that. I can still do that. I can still do that today. You have to take this like a superpower that's unconstrained and focus it. You have to use it as a tool. And I thought, wait a minute, I have a superpower? That's incredible. How can I use it? And that's really what started working. All of a sudden, I blew through in reading, and I started scoring in the top quartile, because I felt that, if I had to read the book upside down in a mirror, I'd read the book upside down in a mirror, because no one else could do it. And I said to Sam, listen, am I going to have to read in a mirror for the rest of my life? He said, no. Your brain's advancing. It's advancing. It's figuring things out. And of course, he was right. I'm a ferocious reader now. I mean, I read everything, but I can still do it upside down in a mirror. That's an added feature. It's not a bug. It's a feature. That's the way I started to think about dyslexia. And I also excelled in math. I'm a balance sheet guy. I'm a financier. That's what I do now because of Sam and Marjorie Golick. My message to parents that have dyslexic children is, you've got to work with them to at that age to make them understand they're gifted. That's what they have. They have a power. And if they can understand that as a gift.
Kevin, what is it about your personal experience that still makes you emotional after all this time?
Well, it was very difficult for my mother.
Mm-hmm.
It really was. She was very worried about me. The challenge is parents don't know the outcome. They don't know if what the future holds. They're not sure what's going to happen. And that puts a lot of pressure on relationships and families, particularly if one sibling has it and the other doesn't.
Right.
Because then you have a situation where one's excelling right away and the other's falling behind. It just puts a horrible pressure on any family. But again, I say to people that this is a unique learning disability. It's one of the only learning disabilities that can give incredible functionality as the outcome of solving it.
I want to talk a little bit about dyslexia in the workplace. I think there are lots of misconceptions that employers have about dyslexic people. And I'm just wondering, in your personal experience, when you were starting out, did you let potential employers know about your dyslexia? How did you deal with it?
No, that is not a requirement. And I don't think you lead with that, because what they want are functional employees. And my attitude about people that have dyslexia is they are super functional in many areas. They are very, very functional. And so they should be measured by that. I don't like the idea that you should put that on your resume or even discuss it. If you've dealt with it and you can read and your math scores are above average again, or even average, life is not just about math and reading. It's actually cognitive skills that matter in the workplace.
Kevin, what, if anything, do you think companies should be doing, maybe your own companies do, to support people with dyslexia or other neurodiverse conditions like ADHD, like autism?
I think as a society, we deserve to support people, that are unfortunate with those disabilities. And there's always, in a large corporation, even a small one, a place for people that, there's a job that can be created that makes them feel important and gives them self-confidence. Dyslexia, however, to me, is a competitive weapon. I would hire lots of dyslexics because I know they can excel in certain things in a remarkable way, above the average. And so I would argue to an employer that, this is not a concern, this is an opportunity. And I feel that way about many learning disabilities. People that have learning disabilities are often very, very motivated to perform for their own self-confidence reasons and to prove their worth. And that not every employee does that. Mm-hmm. There's lots of lazy people out there. And you will not find that in people that have learning disabilities. They want to be functioning human beings and provide productivity. And they're myopically focused on it because that's what gives them their own identity. And that's the thing that many employers have figured out. I mean, we're enlightened now. We weren't in the 60s and the 70s. We pushed those people out of the workplace because we thought it would be a competitive disadvantage. That's not the case today. And where you often see companies really support this is in technology, because it's the out-of-the-box thinkers that make companies competitive, the crazy ones, the dyslexic ones.
And there you have it, a candid and emotional Kevin OLeary. Quite a different change of pace there. We usually see Mr. Wonderful being pretty gruff, have a rough exterior as an investor on Shark Tank, talking about how dyslexia is his superpower.
Welcome back. We're continuing our conversation with Denise Brody, journalist and founder of Rebel Talent and author of The Elephant in the Playroom, essays about special needs families. We're also joined now by Hiren Shukla from Ernst & Young, one of the big four accounting firms. Hiren, I want to start with you. Earlier in the show, we were listening to Kevin OLeary, who essentially called for more positions at work that featured neurodivergent candidates. What is the business case here for hiring some of those neurodivergent candidates?
Yeah, thank you, first of all, for having me. Business case is really easy. Agility, resiliency, innovation. How are you going to see around the corner of not only today's issues, but tomorrow's? It's going to take a high performance team that's multidimensional. And without the neurodivergent workforce, frankly, we're going to miss a whole bunch of things.
Hi, Denise. I want to get your thoughts on something we heard Kevin OLeary talk about earlier in the show. He talked about being dyslexic, but he said he never put it on a resume. He doesn't think people should lead with it during a job interview. I know you yourself have ADHD and are dyslexic, and I'm curious what you've done in your own career.
I took a leap of faith and said, I'm going to write about this, and I'm putting it all out there. And I was just very clear with myself. It's out there. I'm going to feel good about it, and I'm going to talk positively about it. So when you do those things, you can feel good about it. You feel comfortable asking for what you need to do your best work. Then you're very successful. That's what I decided to do. And that's how I ended up really helping other people in my business to say, no, don't start as if you have, some sort of issue. Start as though you have something really amazing, like we just heard, to offer the company. But that's, again, not for everyone.
So Hiren, you've laid out the pretty clear business case about why really managers, human resources, anyone in a hiring position really should be seeking out some of these neurodivergent candidates. But neurodiversity is largely invisible. And as Denise is mentioning, and even Kevin O'Leary mentioned earlier, not everyone is as comfortable being upfront about that, particularly during the hiring process. So how would you advise companies or hiring managers to really, in a way, screen for some of these candidates to ensure that they are increasing their neurodiversity among their employee ranks?
I think that the concept of psychological safety starts when you're actually posting for the job. Most job descriptions are the kitchen sink. And frankly, neurodivergent candidates will screen themselves out of things like that. So I think that being an authentic company that really wants to provide the psychological safety. We talk about diversity, inclusiveness, belonging, and equity. When you activate that and allow individuals to say, I'm comfortable raising my hand, be myself, I don't have to mask, I don't have to camouflage, that's when you're going to see innovation capacity that is beyond anything you could have ever expected. But I think it starts with job posting, and then it goes into the hiring process, for which most behavioral-based interviews today in corporations don't work. We're looking for people to build social rapport and to be witty and think on their feet, where we're really looking for performance. How do you perform in certain areas? And so I think there's a real inflection point right now in the talent world, is if we don't expand the thinking around how you're going to create a positive environment for the candidate, and then really see them through the lens in which they shine, I think that unfortunately most processes will unfortunately screen neurodivergent candidates out versus allowing them in.
And Hiren, what advice do you give to people who are neurodiverse in the workplace? When and how should they disclose their differences?
Yeah, what a fantastic question. I'm going to back up for a moment. So the term neurodiversity represents all thinking styles in the world, everybody. Neurodivergent individuals who I think have been under a tremendous amount of stress, trying to camouflage or mask themselves. I would say for them, and it's easy for me to say as an ally, I know it's harder to do, but I think for that candidate, the neurodivergent candidate, to be successful, you want to be in an environment where a company is making explicit signals to you. They see you, they recognize you, they want you to be who you are, even if it's this spiky profile that many of our neurodivergent team members describe their thought process as. So I think it's important as much as possible to feel safe disclosing. And frankly, I would say for those organizations that will look down or negatively if you're disclosing, I would say that's probably not an organization you want to work with in the first place.
All right, look, we're going to have to leave it there, but certainly an important discussion, and I'm glad we got to tiptoe into it today. Hiren Shukla and Denise Brody, thanks so much for being with us. For Sibile, Kristin, and myself, thanks for being with us today.
It's the second day of Amazon's 48-hour sale known as Prime Day. The sale rakes in huge profits for Amazon, but puts a lot of stress on warehouse workers. Our next guest led a strike against the company and joins us now. We want to welcome Christian Smalls, former Amazon worker, who was a leader of that Staten Island strike and founder of the Congress of Essential Workers. Welcome, Christian. So as I just mentioned, really Amazon brings in a lot of money on Prime Day, which is actually technically 2 days. I'm curious to know, with some of those profits, what do you think they should be doing to help some of those workers, those employees, particularly ones that are in those warehouses that are now working a lot of long hours to make sure that folks can get all of their goods that they've been purchasing over these last 2 days?
Well, absolutely. I mean, when we're talking about Prime Day and the millions of dollars that they're about to rake in for these next 2 days, we always talking about pay, having a decent wage for workers. And that's exactly what we're going to be fighting for when it comes to unionizing. We want to absolutely increase the wage, to have a decent living wage for all workers all across the country, not just here in New York, but everywhere. They deserve to have an increase.
Kristin, for people who are not really familiar with your story, you no longer work at Amazon. Can you share with us what happened? Why did you leave the company? And what was your personal experience like working in an Amazon distribution center?
Yes. Well, I'll start with what it was like to work there. I used to tell my new hires as a supervisor, if you have a gym membership, you might want to cancel it. It's 10, 11, 12 hours of calisthenics. You're working 40, 50, 60 hours a week. It takes a toll on your body. These buildings are massive, 1 million square feet. JFK, for example, 14 NFL football fields. I literally walk the state of Rhode Island every day. No exaggeration there, 30 to 60 miles a day. You're exhausted. That's just what it is. I tell people you got to eat your food at night, take a shower, and get some sleep. Rinse and repeat, because that's what you're going to be doing while you're working at Amazon. And the reason why I was terminated last year is because I seen when the virus came into play that the company failed to protect its workers, failed to provide us with PPE. So I spoke up about it. I was one of the only assistant managers at my facility that really took a stance against the company. And I did a walkout on March 30th. And 2 hours after that walkout, I was terminated by the company.
Now, Kristin, you're not the only one who's been taking a stance against Amazon. We see a lot of members of Congress doing the same thing. On both sides of the aisle, they've targeted Amazon for a series of antitrust legislation. Some folks really calling for Amazon in some form or way to be broken up. What's your response to some of those bills that are being directed right now at the company? And do you support a movement to essentially break up Amazon?
Yeah, I support it. Amazon has way too much power. It controls the market. We all know that. This is not something new. I support the PRO Act. I believe that, that should be passed so that it can help our efforts when it comes to unionizing. The company shouldn't be allowed to spend millions of dollars to stop the collective bargaining of the workers. We should have some type of legislator that protect the workers, protect their rights to organize. And I believe the PRO Act can definitely do that. And we definitely want to hold our elected officials accountable, starting with Biden. Biden has the power right now to put in an executive order. And hopefully our efforts here in New York and efforts that's going to start all across the country, I believe also with the Teamsters and other unions that are fighting against Amazon right now or trying to organize against Amazon. They all need to be pushing for the same thing to make sure that our elected officials definitely put in some bills that protect the workers to help us organize.
So Amazon paying its workers now $15 an hour, offering benefits. What more do you want to see them do? What would you like to see? If you had to pick one big change, Kristin, that they were going to do across the board at all their distribution centers, and you had Jeff Bezos in a room alone with you, what would you tell him?
Well, job security is number one. We already know they're going to use that. They pay better than their competitors, spend all the time. It's not enough, especially with the cost of living. And we was talking about inflation earlier. It's not enough, but we can also negotiate for more. But I also want to have job security. Amazon, as you've seen, some people may have seen in the New York Times that just was reported, their turnover rate is at 150%. So for every 10 people they're hiring, they're firing 15. They're not really securing jobs, and there's no growth, no career growth for entry-level workers. So number one thing that I would like to discuss with him is job security, making sure that workers don't just get hired and fired and used at the company's disposal. We want job security.
And just a quick note for everyone, Kristin did mention his support of the PRO Act. So I just want to share that is, of course, protecting the right to organize act that would essentially prevent companies from discouraging its employees from unionizing. Kristin Smalls, former Amazon worker who had led that Staten Island strike and founder of the Congress of Essential Workers. Thanks so much for joining us today.